let's just talk about market activity. Yesterday, the JSE All Share Index down 0.42%, and that's been dragged by resources, which are down 0.69%. Gold miners down somewhere in the region of 108%. What's going on?
We had a very weak report on retail sales in the US. So what happened is that the market expected retail sales to be up about 2%, 2.5%, and it actually only went up by 0.6%. So all the stocks that are geared to worldwide economic activity came under some strain.
Okay, let's talk about the rand. It was slightly under pressure yesterday, closing at about 7.35, but still this week we've seen it move, oscillate from 7.3 to 7.2 within that 10 cents range, and some people say it could even breach 7 rands.
Quite possible. Now, what we're seeing is, number one, is a weak dollar, and the rand tends to be strong when the dollar is weak. The second thing that we are seeing is that the South African economy itself is quite weak. So imports are weak. Our current account deficit is coming under control. So all of these factors actually push the rand stronger. At the same time, what is happening is the world has become a lot less risk averse. You saw the whole Dubai world thing happening last week, and in spite of that, markets are very strong this week. So risk aversion is fading, and that also helps the rand.
I mean, we know of the phenomenal surge in the gold price recently, and we all know it's got to do with the IMF gold sales, central banks stockpiling, people moving into gold as an inflation protector. But what about platinum? Even yesterday, when our markets were under a little bit of pressure, the platinum producers were up 1.56%, and even the price of platinum is lifting.
The one thing that has happened in the last 6 months is that motor car sales worldwide has picked up, and obviously that's a huge influence on the platinum price. So there is the platinum, let's say, platinum and gold are linked to a certain extent. So some people will buy platinum because of the gold price going up, but the gold price is really going up because of its currency issues rather than its usage, whereas platinum is coupled to the worldwide usage. And what has happened there is that Chinese car sales are up about 40% year on year. So car sales in China are extremely strong.
Okay, let's talk about the state of the local economy. President Zuma's been meeting with industry leaders to talk about service delivery and government, and whether or not enough has been done to shelter this economy from the effects of the recession and the global economic crisis. Total jobs shed in the South African economy are about 1 million jobs. He had promised that by December they would have created 500,000 jobs. They're not able to meet that target because?
Mainly because they don't have the implementation capacity. So effectively the government is not in a position, or the government machine is not geared to actually deliver these kind of job growth. At the same time, what has happened is that job losses in the private sector has been much more than expected, and in all, what we have to say is that worldwide businesses are shedding jobs wherever they can, because they want to protect their bottom line, they want to preserve cash. Right. They are not investing into physical infrastructure, but they're also not investing into people.
He has said, though, that jobs that have been saved within the public sector are about 4,482, and when you look at IDC loans to the private sector, about 33 companies have received about 2 billion rands, and that's helped to retain an additional 7,700 jobs. What is the role of these development financing institutions going forward then?
Development finance should really be taking on the kind of risks that the private sector is not prepared to take on. And in normal circumstances, that means very large or some supporting investments into new ventures. So that's what the IDC was started for, and that's been its role all along. At the moment, we see that the private sector is not necessarily funding companies that are taking strain from the recession, so the IDC is stepping in. But 2 billion in the overall scheme of things in South Africa and 7,000 jobs is not a huge amount. It helps. It's not bad, but it's actually still quite small.
Okay, but they're saying that those are the jobs that have been retained. They say that they've created over 223,000 jobs in the second quarter due to the public works program, but it's not the 500,000 that have been promised. Nonetheless, the intervention is now 11 billion rands that's been budgeted for training schemes, for layoff programs, and also loans to distressed companies. I know that President Zuma is very passionate about the SME sector.
Yes, the SME sector obviously taking some real strain, because one of the things that is happening in South Africa is that the banks in South Africa have become a lot tighter than they were a couple of years ago, and a lot of SMEs are dependent on bank finance, and they are taking a lot of strain, and they are also not in a position to expand necessarily.
Okay, let's talk about company reports. Sasol, they're expecting a 45% drop in their interim earnings. That's not good news for many people who'd wanted to move into Sasol shares. Apparently, the good times for Sasol might return only middle of next year.
Well, the thing that you have to say is that a year ago we were actually sitting here, or let's say 18 months ago we were sitting here, and the price of oil was $145 a barrel. Now it's only in the high 70s. So the past year certainly has been a much lower oil price year. So you wouldn't expect Sasol to actually make the same kind of profit. At the same time, Sasol, of course, very dependent on the exchange rate. And the exchange rate has also strengthened. So between the oil price and the exchange rate, Sasol has been in a very tough place.
You know, but Christine Ramon was saying that nonetheless, they are still expecting to invest about 15 billion in 2010, and those plans remain unchanged. We know about their liquefied gas initiatives. We know about their investments in the former USSR, in the Middle East and Qatar.
Indonesia as well, I believe they're investing some money. So, but Sasol has always been a company that has huge investments into existing and new plants. So Sasol is not really a business that you can run without big investment. In the oil space, Sasol is really the place where you can actually invest money into plant to produce oil and oil derivatives effectively, whereas the investment of normal oil companies is much more into exploration.
If you're an oil or gas company right now and you have to come up with a hedging strategy, what kind of pricing should you be looking at? Because the price of oil has been quite volatile. For the last few years, they have left their upper limit somewhere between $65 to $70 a barrel, and they're now using a strategy that's very close to that.
Indeed, but so what we're actually seeing is that the oil price at the moment is high enough for Sasol to make significant profit.
Yeah.
Much better, in fact, than last year, just going forward. So what they need to do is to actually hedge around about this level or slightly lower, just to make sure that if, for whatever reason, the oil price was to go back down to $40 an ounce, they would still be in play. But in that sense, you wouldn't necessarily hedge your whole book, because as the world economy swings up, it's actually likely that the price will go up.
Okay, we've been talking about US retail sales figures that came out yesterday. Today, it's US jobs data. We know that the US consumer is what really drives that economy and effectively demand for products abroad. What about the South African consumer as we head into the Christmas season?
Extremely weak, extremely weak. We really haven't seen the South African consumer come to the party at all. What we've seen is that some specific niche sectors of the retail space, some specific retailers have done really well. Shoprite comes to mind, where people trade down into the recession. But in terms of overall spending, people are not borrowing money. They don't really have a lot of access to debt from banks. There's quite a lot of joblessness around. We do feel that sometime by middle next year, we should be seeing the consumer coming back, because those with jobs have had quite high raises. So that should support consumer spending going forward.